Hey, Jack.
Marcy, we want to make this video, I don't know the date, I think it's November 11th.
Yes, Veterans Day.
Veterans Day, you're right.
Mhm.
Thank you, our veterans. The truth is, because they've sacrificed so much, we're sitting here,
Yes,
free.
true.
We don't thank them enough, but thank you, our veterans. But we want to make this, it's a unique time in the economy. We're after the elections, there's turmoil in the world, and there's a lot of stress in the market, and frankly, there's not a lot of deals out there, and brokers are under stress. So I want to make a video to cover these topics really for mortgage brokers. So the topics we want to cover in no order of importance: what's our strike zone? What deals are we doing? I want to give examples of deals that we've done in the past month or so, and talk about how focus on deals we can do. There's a lot of stuff we can do, but we need to focus on what we can do. Also want to talk about deals we don't do and can't do, why we don't do them, why we can't do them, what happens if a deal goes bad, and what are we seeing now in the marketplace. All with the intent that the brokers can use this information to better close deals and to not waste.
Look for the deals that can close.
Yeah, look for the deals that can close. So that's what I want to go into. And so let's talk, Marcy, first about, I'm going to call it, what are we seeing now? Because it seems to me that brokers, well, first of all, across the board in our market, it's slow. There's not a lot of good deals. There's not a lot of deals closing, and there's just stress in the market. And we feel the stress. We feel it for the brokers. But what do you think we're seeing in the marketplace now? Let's talk about it. And I also want to preface it that that I've been doing this. I'm 62, since I've been about 20, long time. Been self-employed for 35, 36 years. So the markets come and go.
Yeah, it's like a hill. It goes up and down.
And brokers need to be able to withstand the bad markets and frankly pivot. And we're going to be talking about that too. But I'm sorry. What do you think is going on in the marketplace? What kind of deals are we seeing? What's the feedback from brokers? And let's talk about it.
Well, we're seeing a lot of deals that have high leverage. There's a lot of deals that we're seeing that are too specialized. There's a lot of deals that we're seeing that are in rural areas. Unfortunately, these are the type of deals that we just mentioned before that we can't do.
Yeah.
But we are seeing deals that we can do.
Yeah, so on the stuff that what we're seeing now is, you're right, we're seeing a lot of deals that we can't do and frankly can't be done. And I believe anywhere. And I believe we're seeing that because in a good market, a mortgage broker is not working on those deals. They're not investing their time. But because there's so few good deals that can close, and to be candid with you, a lot of brokers are desperate. I feel for them. They have bills to pay, they have families to support, rent to pay, a mortgage to pay, whatever. They need to do deals. So we're experiencing a higher than normal amount of deals that can't be done. We can't do them. I don't think other people could do them. And to be very blunt, a higher amount of things, I don't want to use the word fraud, but I'll say things that are not factual.
Right. Well, they're trying to paint a picture so it fits with us, but it really doesn't fit.
Yeah. So, that's what we're seeing. Things are tough, and when things are tough, desperate people do desperate things. It's a challenge to be a broker. It's a challenge to be a borrower. A lot of borrowers are under stress, and we have to deal with it. Look, I want to address how we deal with it first, and then let's focus on what we can do. We hold our loans. We're not selling our loans. We have to service the loans. Every day there's conversation in here about delinquency and things like that. So when a deal goes bad, we have to live with the repercussions. And, it's a challenge to do it. And it takes sometimes years to foreclose. And it costs us a fortune. Everyone who's self-employed, including a broker, their number one job, and most people lose sight of this, I believe their number one job is to be here next year, in 5 years, in 10 years, in 20 years. So the ongoing success of the business is their number one thing. And sometimes it's hard to be,
that's why
they're short-sighted in it.
Right, but that's why we're very disciplined.
Yes.
We're very disciplined on what deals that we lend on, because We want everyone to be successful, right? I mean, like, we do,
100%.
we don't want anyone to, get in a bad situation where they can't make their loan payment.
You're right. So let's talk about, let's start in a positive. Let's talk about our strike zone. I want to give examples of deals that we've closed in the last, 6 weeks. I picked the last 7 deals we closed. I don't know what time frame. So our strike zone, I'll start off and you chime in, because you know it better than me. $50,000 to $1 million. We just closed a deal for $1.5 million. It's fine, but we're not doing the big deals. I think Marcy or Michael Ross, someone just told me we just got a loan request for $8 million, and the broker was annoyed we don't do it. We don't do it.
That's not our fit.
So that's the dollar amount. We like low leverage, we like good markets. We take into consideration the markets, whether it's fast growing, whether the population shrinking, to be honest with it, how litigious the market is, how God forbid long it takes us to foreclose or evict or something like that. We take that into consideration.
We also look at like crime rates and
100%.
tax brackets and, there's a lot of variables, Jack.
You're right. We do not do value add or heavy lift deals. We don't do office to multifamily conversions or things like that. Right. And the reason is because when they go bad, how do we deal with it?
And also with those deals, and any lender would probably agree with us, everyone always has a budget, and they always go over budget.
Always go over budget. Yeah,
So.
Yeah, that's correct. We're very flexible on docs. One of the deals we're going to talk about is an office condo we closed, total no recourse to the individual.
Right.
It was title, appraisal, that's it. In this,
not appraisal.
No, I'm sorry, not appraisal. What am I saying?
We don't do appraisals.
No appraisals,
title,
no appraisal.
And we did our own internal evaluation.
That's what I meant, internal evaluation.
Yeah.
But this particular deal, we didn't get any bank statements from the borrower. We didn't get
on the collateral.
Yeah, so we're very flexible with the documents if we like the collateral.
Right.
What else is our strike zone, do you think?
Well, I mean, if someone is like in a situation where they are going into pre-foreclosure and they have enough equity in the property, those are the deals that we thrive on, that we're very successful with, because we can get it done for you fast. A couple of deals that came our way, the borrower actually lost the property and they were in the redemption period, and we were able to structure a type of deal to help them with that also, where we structured where the deal was like in one of our LLCs and they rented for us, but then they have the option to rebuy it. So it saved their property, and there was enough equity in the deal, so we like the collateral. We like to do, we love single family homes, a true investment. Those are great mixed use properties, strike zone. We love mixed use. We don't have any conditions about square footage like a lot of banks do. We don't care about that. We like owner occupied businesses. We'll do like an office, building with 1, 2, 3 tenants in it. I don't know, what else do you think, John?
Yeah, I think they're all good, and I want to talk about that a little bit more. We like leverage. Again, we're a portfolio lender. We're not selling the loans on the secondary market. The quality of the collateral, we put 90%, 95% weight in. It doesn't mean we're not looking at the borrower. Brokers.
We want to make sure that they can
brokers sometimes say, "Oh, what do you care?" About the borrower. We do.
A little bit,
If you walk down the street and they ask someone to lend you $1, people are going to care. So we're lending whatever $400,000 or $500,000. We care. It doesn't mean we don't care, but the weight goes to the borrower. I'm sorry, the collateral.
Yeah.
So if the borrower has bad credit, or it's a foreclosure, or whatever it may be, and there's all kinds of scenarios, that's fine if we know it up front. But it's critical that we know it up front and it's not hidden from us, because chances are we're going to find
out.
Yeah, we're going to find out. We don't do no questions asked loans. If you're looking for no questions asked loan, we're probably not the right place. But we do no recourse loans. It's a big difference. So look, we outlined our strike zone. Most of the time, our borrowers are coming to us because they need to close quick, or they can't go to a bank or another institution.
Or the loans ballooning. A lot of that comes our way. That they had a bridge, and then that bridge lender is not want to, renew it for whatever reason, that maybe they're taking commercial off of their, pipeline, who knows? But those are the type of loans that come to us very often, and we get it done for them.
That's correct. That's correct. Now, I want to talk a little bit, maybe I'm going a little bit out of order, but it's important.
It's okay.
Brokers get, sometimes when we can't do deals, they get stressed out and they get mad at us. Again, it's nothing personal. We're making the best educated decision we can. We are not perfect. We don't hit the nail on the head every time. We don't. But we always have to go on the side of conservatism because we're lending money. And if we make mistakes, we will be out of business, and that's not good.
Right. So like a lot of times with the brokers, Jack, what comes up most often with me, you may feel different, is a lot of the brokers, we differ on our value of the property. So, but then again, and everyone needs to understand is everything's an opinion. So we have a team here that's all they do all day long is value properties for us. And we take into consideration, if it's rented, the expenses on it, the area, the cap rate. We look at everything. We look at the expenses, and we come up with our own value. So that, I will tell you, is my most common factor of why there's a disagreement with a broker when they bring the loan to me and I say we're passing, I don't agree with the value. And again, Jack and I, it's our opinion from experience, but it's our opinion, right?
100%. Look, Marcy, you and I have made so many videos and we've talked so much on if a broker wants to be a success, they can't take shortcuts and they need to learn. And one of the things they need to learn is how to do an evaluation.
It's like the first thing.
It's the first thing, but brokers don't do it. I'll tell you a real life story that happened the end of last week. We got an appraisal in, and it came in at my numbers may be off, but like $800,000. And the property happened to be in Northeast Philadelphia. I actually know the street. Ask me how I know the street.
Oh boy, what were you doing on that street?
Well, when I was probably 12, 13 years old, one of my first things I did was sold pretzels on the street corner of Philadelphia.
That's kind of cool,
and I sold pretzels at Cotman.
They have the best pretzels.
They do.
Yeah.
Cotman and Frankfurt Avenue, if anyone knows Philadelphia. And this property was a couple blocks away. I haven't been there in many years, but I know the street very well. And I just know the area. We have a lot of loans in the area. We own some real estate in the area. I know the area very well. So one of the guys here told me the address. I was so excited because
you knew the area.
I knew the area.
Yeah.
I knew, and I have a lot of funny stories. You learned a lot from selling pretzels on the street corners of Philadelphia.
I think it sounds fun.
You learn a lot. You really do. It helps build character. Yeah. I learned so much. But anyway, they told me the address. They told me the type of property. Instantly, I had an idea of value in my head.
Right.
But to be honest with you, the values are all over the place, and I'm a little outdated. So I'm thinking, okay, maybe I'm wrong. They show me the appraisal, and this is crazy. How are they coming up with this value? It was like $800,000. I thought it was worth $350,000 to $400,000. Well, I actually looked page by page at the comps to see, am I off or the appraisal's off? They took properties not even close in the same area. Mayfair, this is areas, Mayfair and Philadelphia, it's a working class neighborhood. It's a working class neighborhood. They took comps miles and miles away in touristy areas and just totally different areres. It wasn't even close.
This goes into the play that this is why we don't do appraisals.
Yeah, it wasn't even close. This appraiser, literally, it was a joke. But the mortgage broker didn't take the time. And by the way, we were, I think, the second or third lender they sent the appraisal to, and no one would do it. Right. And because everyone came to the same conclusion, the appraisal was terrible. And mortgage brokers have to really dig in and watch some of our videos, how we talk about this. I don't want to go through it all again, but brokers need to learn the deal. Brokers need to learn the deal. If it's a good deal, we want to do it. But the ramifications of us making a bad deal are so catastrophic, we just can't afford to make those kind of mistakes. And we
try to avoid as much as possible
100%.
To make any of those mistakes before we do the loan.
It's 100%.
And listen, we've done loans that didn't play out correctly.
So the ramifications, if you do a loan that goes bad, it could be years before you're paid back, and the legal fees could be easy $100,000. You know,
sometimes even more than the loan.
Sometimes they're less than that.
Yeah.
But we're involved with one in New Jersey right now that's taken forever to foreclose on. The legal fees are like $130,000. It's crazy. So we'd be out of business if we weren't conservative. So, I'm not shy away, and I'm not embarrassed, and I don't feel bad about not doing deals that don't make sense.
We truly do our due diligence.
We do our due diligence. We stay disciplined. So let's focus on deals that we closed. And I want to talk. You just brought. Let's talk about that because that's not one on my list.
Okay. What did I say?
Well, it was okay. It was a foreclosure. It really wasn't a foreclosure ballot. It was in Battle Creek, Michigan.
The redemption period.
The redemption period. It was a doctor. I don't want to use the name, but they operated like a beauty school in there, and they did hair in there, nails, and all kinds of stuff. It was a great building, like 10,000 square feet. She approached us. We approved the deal. It wasn't in foreclosure yet. We approved the deal. She didn't go with us. She approached us again. A couple months later, we approved the deal again. Didn't go with us. I'll fast forward 6 months. She calls us back. She already lost the property, but we were still able to do it. And what we did was we bought the property back in the right of redemption from the people who took it over. And we gave her a sale leaseback with the right to buy it back from us. So really, same economics of a mortgage. We finance.
But she would have been so much better off going with us from the very beginning.
Well,
she had so much heartache.
Borrowers procrastinate all the time, and brokers all the time. So that's a deal that we closed. Mortgage broker made a great commission on. I think it was $460, $470, something like that. And it was a deal. She needed to get it done. No appraisal, no environmental. Really, her credit wasn't good. What was good? What was our attraction to the deal?
The collateral.
The collateral. I was just gonna say, we don't do drugs. We really don't drink. We're not crazy. It was the collateral. I don't remember what we thought the collateral was, but we thought we'd be fine if she didn't pay us. And every deal we do, we ask the same question. We say, if the borrower doesn't pay, are we gonna be okay? If the answer is no, we're not doing the deal. If the answer is yes, we'll try to do the deal. Yeah.
We have to be able to do something with it.
Look, I'm very sympathetic to brokers. I started out as one. I get it. You need to make a living. Brokers need to use this time to pivot, to find something that sells, and we're going to talk about that after because I have some ideas on it. Okay, so let's go through some deals that we've closed. And by the way, I just picked a random 6 or 7 deals we've just closed. Okay, Orlando. Okay, we did a non-recourse loan on an office condo. As I remember,
gorgeous collateral.
Gorgeous collateral. Gorgeous. I think the LTV was a 50 LTV. I believe the guy was a doctor, but not a research doctor.
Right.
And again, no appraisal, no environmental. We did an internal valuation, title, insurance, no bank statements, no personal financial statements, no tax returns, none of this. We don't know how his credit is. He could have been the worst credit in the world. Why did we do it? Because he told us he wanted it up front. It was a 50 LTV. I think the property was worth like $1 million, $1.2 million. We let him $5 million, something like it. It was a great property. And we thought we'd be safe with it. That's why we do it. And we would do that deal again and again. I only hope brokers, this is a key to get business, okay? This is an inflection point that you could take a bad economy because we'll do those non-recourse deals on good leverage real estate. So find them. Target good leverage real estate and market non-recourse loans. No appraisal, no environmental, no credit report, no tax returns. What else was no? A lot of stuff was no.
Yeah.
Everything.
I mean, the bottom line is like when we say no recourse, like this particular person did not want to personally guarantee the loan. That's it.
And it was fine.
It was fine. The LLC took it. We closed in LLCs, and then that was the situation.
Bring me those deals. Bring us those deals, brokers. It's a challenge. We will close them.
Yeah.
We love to close them. Again, it has to make sense. It has to make sense. It was great real estate, but find them and we will close them. Okay, the next one, 3 homes. I forget where in South Florida.
Vero Beach.
Vero Beach,
so it was
okay.
3 homes that was a blanket loan. So what we mean by that is that we took the 3 houses and 3 different LLCs, and we made 1 loan on it, and they're all the collateral. And she had a loan. She actually had a blanket that was ballooning, And she came to us. We had to close fast, and she did not have time to go to a bank, and we got it done for her like so fast. We ordered title.
No appraisal, no environmental, and
nothing.
As I remember this, tell me if I'm wrong, her husband passed away a couple years ago, and they owned a lot of property, and these were 3 single-family homes, 2 were rented, and her son lived in 1.
Correct. So there was no income on one of them.
And it did not debt service.
No, but she was a strong borrower.
And we were, I don't know the LTV, I don't remember.
Yeah, I think it was still 65%, but South
Again,
Florida,
maturity default.
North Florida was fine.
It closed. We got the call. The broker was so thrilled, beyond thrilled. The borrower was thrilled. It closed. Again, brokers target these deals. Maturity default. She couldn't go to a bank. She needed to close quick. Okay. Oh, I love this deal. I love them all. The truth is, I love them all. A Connecticut.
He loves what we do. I love too.
I do. I'm excited. This was a Connecticut refinance on a daycare center.
Correct. And this is also a good example of what you were saying before. This particular deal had been seen by several banks before it came to us. And they wanted a higher loan amount, and they couldn't get it anywhere because the truth of the matter was that the property was not valued at what the borrower thought. The market really tells you what the property was valued at. So we did our due diligence. At first we were like, oh, maybe we could do this and do that. Then we did our due diligence and said, well, this is how much it really is worth, and this is the loan amount that we can do for you. So they weren't surprised,
No.
the broker, the borrower. They were like, okay.
Marcy, if you remember this one, this is, I love entrepreneurs. This is a hardworking young lady.
Yeah.
She operated 1 or 2 daycare centers herself, and she bought this as an investment property.
It has a tenant in there.
And a seller take back. She was paying out more in mortgage than the tenant was paying every month.
Yes.
I think the rent was like $2,300 or $2,500.
Like
$5,000 a month.
Yeah.
A hard-working, salt of the earth person.
Yeah.
She happened to be a woman. It was beautiful. Beautiful. I love these risk-taking entrepreneurs. But when the broker sent us the deal, he didn't know this, and he sent us a profit and loss statement on the tenant.
On her, no, she sent us a profit and loss statement on her daycare, not on the tenant. And he thought that it
Broker's
was
a great guy. No offense, he's
Yeah.
probably going to be watching this. Do your homework up front, because we took the time. We actually called this borrower. We asked the broker. We called this borrower. We got the straight story. We approved it on the phone. But you could be sending this to other people, and they're not going to approve it because they don't understand. But this is a deal, again, closed. These are all deals, by the way. These 7 deals, plus the one Marcy said in Battle Creek, all closed in the last month or 2. So these are real life deals. Brokers made commissions on them,
And in this particular deal, she had a portion that had to be paid off, but it was like a lot of cash out.
Yeah. You're right. You're 100%. By the way, the first deal in Orlando was cash out. The Connecticut Day Center was cash out. Okay, the next deal I'm going to talk about was cash out too. It was a small strip center in New York. I think it was a suburb of Buffalo.
Yeah.
The guy owned it for a while. He just wanted $200,000 cash out.
Yeah. Simple
Simple.
loan.
Again, all the same. No appraisals. By the way, we're not doing appraisals on anything. So if I don't say it, it's not, we did an appraisal.
Yeah.
I don't think we've done appraisals before COVID, I think, right?
It's like 4 years.
Yeah. So again, simple loan, cash out, easy target, mortgage broker made money. Okay, another deal, Brickell Condo. It was referred to us, an attorney referred it to another attorney, a Canadian citizen. Buys a condo in Brickell. He had, I don't know, $150,000, $200,000 down. Hard deposit. He was turned down from
because he was foreign national.
Yeah, but there's foreign national programs. But it got to the point.
He had no time.
He has no time. We saw the deal.
Yeah.
We approved the deal. We closed it a week, 10 days.
Yeah.
Foreign national, Brickell Condo purchase. Boom, boom, boom. He was happy. He spoke to me. The attorneys was happy.
Everyone was good. It was a good deal.
Again, these are not, oh, maybe you could do these type deals. These deals are closed, brokers. Brokers made money on these. So just go find out one of these deals and get us one of these, and you will feed your family and make money. Okay, let's keep going. And then I want to jump onto other things. Baton Rouge, Louisiana. I wrote LA, it's not in LA. The borrowers lived in LA.
Yeah.
An office condo, a cash out. I think the guy was a psychologist or psychiatrist, He used to operate his business there. He sold it to someone else, and they're a tenant. And to be honest, I don't really know why he needed cash out.
For a business investment.
That's what they all say. But whatever, he needed it for that. Okay, so that's 7 deals, and we also have closed plenty of condominium association loans.
So let's define what that is, because a lot of people get very confused. So a condo association loan is that we're making a loan to the HOA. We're making a loan to the master HOA. So our collateral is the dues that the people pay monthly. That's our collateral. And the reason that the HOAs need these loans is because they have to do pretty much deferred maintenance. That's what comes up. They need a new roof. They need to do, fix balconies, whatever the case may be. They need a loan to fix something all over the condo.
Yeah, and we're doing these, we're closing them quick, and most of them come from mortgage brokers all over the country, So look, we're closing deals, we're actively closing deals. I don't mean, I feel like I'm a little bit too hard to brokers, and I apologize.
Well, no, we're not hard, but listen, we're just being honest.
I just want
we want you to be successful, so also your time is valuable as ours is too. So let's cut through all the stuff, just get to the point and figure out what you need to do to get loans closed.
So we see brokers wasting a lot of times on deals that don't close.
Yeah.
To be honest, I think it's a mistake. I think when a broker takes a deal, they
make sure it's closable.
Make sure it's closable. They need to handicap the deal up front. If it's not closable, my advice would be don't work on it. Yeah. Don't work on the pie in the sky deals. Work on what you can close. Okay, move on.
And even when you say if it's closed, I mean the first thing also to ask a borrower is do you have clear title? We have just so that you can start working on that
what I think we're seeing is a lot of brokers don't have control of deals.
Yeah, they're getting them from another broker.
Yeah, broker to broker to broker. They don't have control. They're flailing around in desperation to get a deal closed, and it doesn't work. It doesn't work. If I were the broker, I would stop wasting my time and be laser focused on what can close. Right. Give you a perfect example. We approved a deal, 2-3 weeks ago, and we always ask the broker, how many points do you want? And we put it on our term sheet. The broker wanted 6 points. The borrower did not go with it.
Yeah.
And you know what the broker's reaction was? By the way, the broker says there was 2 or 3 other brokers involved.
Well, that's why they all wanted to.
And the broker wouldn't come down. And the bottom line is the broker got 6% of nothing because it didn't close. But if he would have maybe priced it at 1 or 2 points, which is normal, the deal would have been closed. So we're seeing, again, just time suck wastes. So brokers, be laser focused. Now is actually, I think, a good time, even though business is slow, because brokers can focus and redefine themselves and use it as an opportunity, a moment in time to recreate themselves and sharpen up.
We've talked about this so many times, to really target certain marketing, out there.
Yeah.
That's really important.
Focus, I'm sorry.
No, you just can't be all over the place. You have to decide what kind of borrowers you want to go after or looking for. If you want to advertise non-recourse, or if you want to advertise mixed-use properties,
foreclosure bailouts,
bankruptcy. We are experienced in all of that, but as a broker, you have to focus on what kind of deals you're looking for. And we're giving you the tips right now to tell you what kind of deals we like, so you can use that as your marketing strategy to advertise for those type of deals.
The broker is I always think of the broker is the guy taking the toll on the turnpike or going over a bridge.
Yeah.
They don't have guys anymore, but in my day they had guys. Now it's all easy pass.
I've seen guys.
You have to pay a toll to get over the bridge. The broker's the toll gate. On one side of the bridge is a borrower really wanting to close and needing to close. On the other side is the money, and the broker gets paid for that. That's legitimate. I've supported my family that way. It's perfectly good, but the broker needs to hone in on what needs to be done. Right. In this market, it's the have-to deals and the time-sensitive deals.
And listen, we're in a partner with you to get it closed.
We want to get it closed.
You work with me. I take it all the way to closing, and I incorporate all your help. Or even if you don't want to participate, I just take it to closing.
So let's talk about deals that we don't do, because we get a lot of calls and emails on deals we don't do. And look, say what you want about us. We know what we like and we know what we don't like. and it shouldn't be a surprise. And again, there's always the cases that are judgment calls, but you know, we don't do rural, we don't do industrial, we don't do rooming houses, we don't do land, we don't do heavy lift or construction deals. Specialized properties. We're very focused on the collateral, and what we say is, if we had to take it back, could we rent it out or sell it with ease? And what would we do? And you know, like this morning or last night, we got a deal from a very good broker, a guy we've known for many years.
Yeah.
He sent us it was like a 4-story, 60,000 square foot building in Baltimore. It was a vacant office building to apartment conversion.
Yeah, that's huge. Like, I think there was a Walgreens on the bottom,
Yeah,
they said, and then apartments, but it was a complete conversion.
We don't do that.
Yeah, we don't do redevelopment.
Look, and we don't do it for a few reasons. We don't have the expertise in it. It's an expert. You need to know what you're doing. We don't have the expertise in it, and we don't want to take the risk.
Yeah.
You know, it's just as simple as that. That's not our play. Again, I always say, you don't go to McDonald's and order a pizza. You know, we know what we like. Give us the single family homes. We do those.
Yeah.
You know, we
Strip
also
shopping centers.
strip centers. We
Yeah.
also don't do rooming houses. You know, a broker brought us a deal the other day.
So let's define a rooming house. It's
Yeah.
like if there's bedrooms and there's a common bathroom. We don't do those.
Yeah.
Because we could never manage
We
them.
can't manage
We don't do
it.
bed and breakfasts, like anything like that, no.
You know, a broker brought us a deal the other day, and it was a good broker. He actually was one of these 7 loans that we closed. And he brings us a deal. He tells me, "Oh, I got this deal. It's a 30 LTV, and we find it." He didn't tell me this. He told me that part. Then he told Michael, "Well, it's a rooming house, and this was in New York. In New York, it's special zoning and licensing."
And New York is just one violation after another.
It may be a good LTV, but it's
we
just
can't
not for
manage
us. You know, we don't do assisted living facilities, things like that.
And also, like, this comes up a lot. I know it sounds kind of crazy, and it does, because we're a commercial lender, but we can't do any type of residential if the borrower lives, even in one of the units. Like, we can't go anywhere near that. We do not do any owner-occupied residential.
Very good point. Be
No.
upfront about it. You know,
Yeah, because we're gonna find out.
you know, we had a deal. I think it was in Georgia. It was within the past couple weeks.
Yeah.
Good guy. You know, he told us it was first he told us he built another property a couple blocks away or a couple miles away. He moved his family to. The end result was his wife was living there. I don't know if he was too. Who knows? I don't know where the guy sleeps. But it's owner occupied.
It
You know,
just is too close. We can't
can't
take the
do it.
risk.
You know, and the reason is we have nothing wrong with owner occupants. It's the federal government will hang us. I've been hung. If we do an owner occupied, they go to court and they make like we are the worst guys in the world.
The big bag
The
lender.
they'll make it like we're worse than Bernie Madoff, we're worse than bin Laden. You don't know what the federal government and these attorneys do. So we just need to stay away from that stuff. So, you know, I think we're very clear with what we do and what we don't do. I would encourage brokers, now is a good time to get on the phone with Marcy, Michael, Ross, anyone here, and let's have a Zoom or go over exactly what we do and we don't do. We want to help brokers make money, because when you make money, we make money. You know, we'll also pay a point yield spread on deals for 2 years or more. And this, we run specials here and there on it.
Yeah, well, we advertise different things.
Yeah. End of the year special, summer special, you know, for 2 years or more, minimum interest, we'll pay a point yield spread. You know, we approve deals literally instantly within, you know, an hour, a half hour getting the deal, speaking to you. Everything is in writing. We don't retrade. You know, I'm very proud of the fact that every fee, everything is on the.
It's all on the term sheet.
It's all on the term sheet.
So I do encourage brokers and borrowers to please read the term sheet and go over it with any questions.
We're looking to do deals. We understand the frustrations. We understand the marketplace we're in. We're actively looking to do deals. We just need to do deals that make sense for us. Marcy, did we leave anything out?
No, I mean, we're here to help. We want to lend money. We have money to lend. Just bring us the deal that fits with Gelt Financial. So.
Remember, check us out at geltfinancial.com. When your bank says no, we say yes. Oh, I always forget this. like the YouTube, leave comments and questions. We will surely answer them. And take care. Have a great day.
Take care.